Well, it's 1 o'clock on a hectic day, getting our slides all ready to go. Hello, my name is Scott Irwin. I'm here with my partner, Todd Hubbs, and we're going to present a webinar, Updated Supply and Demand Price Prospects for Corn and Soybeans, in light of the big USDA reports earlier in the day. We're also going to take a stab at some of the trade issues that are dominating issues in the grain markets right now. Just a little bit of administrative manners. I think I went the wrong way. There we go.
Little preview.
Yeah, there you go. Come to our next webinar, Todd.
It's gonna be
There's always a next one.
It'll be a humdinger.
Yeah. All right. So if you want the slides for today's presentation, if you are tuned in, you can see them on your dashboard. To the lower right, there'll be a link where you can get a PDF copy of the slides to follow along with our presentation. So you can get them right now there. They should be available for everyone that's tuned in. We will also have the slides available soon at our Farmdoc website under the webinars section, and we'll have a complete video of today's webinar up sometime either late today, but will probably be tomorrow or maybe even Monday. That process takes a little while. Always enjoy getting the questions from the people that tune in to this webinar. So please submit any questions you have during the presentation, and we will do our very best to get to all of them. Our plan, as usual, is that we'll have about 30 minutes of presentation, and then we'll open it up for Q&A, and we'll cover as many as we can get. Right, Todd?
As many as we can answer.
All right. Not all of them right.
That's right.
Okay, so let's get started. All right, we're going to start with the old crop corn situation. The USDA released their latest quarterly corn stocks estimate as of June 1 for the U.S. That number came in at 5.306 million bushels. So our stocks were 77 million bushels higher than a year ago. Basically, I would summarize this information as saying another in a string of slightly to very disappointing news about total usage of corn. This wasn't a major surprise, but nonetheless, it was on the bearish side of the ledger. Here's the June 1 corn stocks estimates from the USDA minus the average trade guess. And for the latest June 1 stocks number, the average trade guess was 52.68. And so the USDA's 53.06 means that stocks were 38 million bushels higher than expected, which means 38 million bushels less use than expected through the third quarter of the 2017-18 marketing year. And you can see, backing up my comment, that we've had now 4 out of the last 5 June 1 stocks estimates for corn have been a bearish surprise. So continually overestimating, as we'll see, feed and residual use, with the exception of 2015. So with that stocks number, we can come up with an estimate of the third quarter feed and residual use of corn, and that comes in based on our calculations at 939 million bushels. That is above 2 years ago, but you can see it's 42 million bushels behind a year ago. And the context for these numbers that both Todd and I will admit is a head scratcher for us as well as lots of other analysts. We see very large livestock numbers right now, and while we certainly know that there's large availability of DDGs from ethanol production, it's still a little hard to square these numbers with the livestock numbers right now. So we can then add up the usage for feed and residual usage for corn for the first 3 quarters of the current marketing year, and that gives us 4.694 billion bushels compared to a year ago at 4.784 million bushels, which you can see, now we're down almost 100 million bushels of total usage through the first three quarters of the marketing year.
Yeah.
Now, we always have to recognize that there's a lot of volatility. I mean, we're 3/4 of the way through the marketing year, and a lot can happen yet in that final quarter of the marketing year and that final stocks number. But,
and there's a little wiggle room in that. We'll get the grain crush report Monday and the final export numbers for May. So, you could see it go 50 one way or the other.
There's always some wiggle room. But this chart kind of says it all, Todd, because the USDA is currently at 5.5 billion bushels of corn for feed and residual use for our current marketing year. And we're 3/4 of the way through the marketing year. And we need to use 806 million bushels in the fourth quarter to reach the USDA's projection. And you can see we have been increasing off that incredibly low number from 2012-13 steadily. Last year we were at 688, but 806 seems like a bit of a bridge too far to us.
Yeah.
And so we're going to make some adjustments in our old crop balance sheet. So the first column that you see on the left is the latest WSDA balance table, S&D, for the 2017-18 U.S. marketing year. This is the U.S. Set of numbers. Of course, we're not going to change any of the total supply. Let's just go through the use side because those are the implications. As I said, the USDA is at 55.5 billion bushels. Even before this grain stocks report, Todd and I were putting the feed and residual use at 54.50.
That's right.
Before this report, so we were 50 million bushels less than the USDA. And based on that little surprise we got this morning, we're going to drop it another 25 million bushels to 54.25. We're going to keep exports the same. Again, there's always a little wiggle room for how those will come out. And so we bump our estimate of total consumption or drop it to 14,765 so that we have 75 million bushels more in our ending stocks number for 17-18 than the latest WSDA. So we're at 2177, gives us a stocks to use ratio of 14.7%, and we're a nickel lower than the last WSDA in terms of the season average price of 335. So that's the old crop information from the reports this morning. Basically a small or modest amount of bearish news for the corn market, but really not a big piece of data compared to what Todd's going to talk about now, which is the acreage part of the reports as they pertain to 2018. Yeah. So take it away, Todd.
I would say on this old crop number, ethanol could be a little bit higher. My calculations right now, if we keep the grind at this way, is about 55.82, but that's so close to what the USDA has. And it could go either way, and we'll talk about ethanol use a little bit more later. And the export numbers they're pretty strong. I think we're going to hit that number. We could actually exceed that a little bit. So while we're sitting here, saying it's 2177, you could see it being around. I could easily see it being around 2125, 2130 by the time it's all said and done. But these are the numbers we have right now. So yeah, the big number, the big news today was, we found a bunch of acreage, about 3.2 million acres actually, and the folks out in the northern plains are killing us. I think we can say that. They ended up planting.
Now we're all part of the same country, Todd.
Not. I'm here in Illinois. I'll worry about them some other time. The principal crops planted is 322.1, and we got a CRPS from about 23.5, and we're putting in there about 2 million acres of prevent plant. We've had such a good planting this year, that might actually be lower, but we're sitting right there. But yeah, we saw a lot of acreage come in from the March report. So you notice the the 317.9, the March Prospective Planning Report right here, yeah, we found a lot of acreage, and here's a little map that NASS provides us. We're up 2.9 million acres from last year. And Scott, when we were sitting here in March, we were wondering where all the acreage went. We felt like it was a little low based on the prices. And, here it comes, right?
There they are.
There they are. And a lot of it is up, especially for corn and soybeans, which we'll get to in detail later, is up North Dakota, Minnesota, South Dakota, Nebraska. The I-states pretty much kept with their corn acreage, and out in the northern plains, they increased it according to the June acreage survey. We saw a little bit out in the east as well, but overall we saw more spring wheat planted. We saw more cotton, actually, a little bit more cotton. We saw 1.1 million more acres of corn, slightly more soybeans. So, we found some acreage, and we're up 2.9 million acres from 2017. And that has implications for prices as we move forward. Like I was saying before, corn came in at 89.1. That was well above the guess of 88,562 that the trade was expecting, and it was 1.1 million acres above the March planting intentions. So, we found those acres, and that is definitely going to impact corn prices, especially with the crop off to such a good start throughout the Corn Belt. When we look state to state, if you guys went back and looked at the March prospective planting numbers, Minnesota was up 300,000 acres. So was North Dakota. Nebraska was up 400,000 acres. Kansas was up 300,000 acres. This is all from the March prospective plantings report. So we found a lot of corn acres out west. It's down 1.03 million acres from last year, or about 1.2%, but it's still higher than the trade expected, and I think it was higher than I expected. I didn't think we'd go over 500,000 acres.
Yeah, neither did I.
And so we found some more corn acres out west. When we look at the planted acres of corn minus the June acreage, as you can see, over the last 5 years, we have added more corn acres before it's all said and done, which is not a comforting feeling for me right now.
That is not a trend that is friendly to the corn market.
I'm not feeling fuzzy about this right here, but we've found more acres as we've went along, and some of them have been significant, so hopefully that doesn't happen this year. When we look at planted minus harvested acres, we come in around 7.3 million on average the last few years. And so when we think about harvested acres for corn, we're using that 7.3 million number. It's varied over time, but the last few years it's been pretty consistent at about 7.3 million. Corn yield, which we're going to talk about when we get to our projections. This is our long-run trend yield estimate of 171.4. Now, we're above that in our estimate for the 18-19 crop year. We've done some work recently on Farmdoc Daily looking at crop conditions report and forecasting yield, and if anybody's interested, I'd say check it out. I think there's some pretty good articles. We did a series of 4. So we got yield at 176 right now. And having said that, there's still a lot of weather to go. There's still a lot of things to happen through July, but the corn crop's off to a good start. So like I said, we got 89.1 at 176 bushels per acre. Puts production at about 14.4. We carried in 2177, which puts total supply at 16.6. On the left-hand column, we got the June WASDE report. It's sort of not fair to compare to them because they haven't got these June acreage numbers yet. But overall, we're looking at a much bigger crop than I expected coming in, mainly due to acreage. So that's something to think about as we move forward, and to pay attention to crop condition reports and what the yield might be as we move through the summer months. In consumption, the USDA dropped it to 53.50. I think Scott, I can speak for Scott. We feel like at some point these livestock numbers are going to kick in for feed and residual. I mean, there is a lot of distillers' grains out there, and it does replace in the ration more corn than meal, but it seems it's a real conundrum for me right now with these acres. So we got it at 5.45 billion. We've got, and let me clarify something which I was mistaken not to. We're looking at 18-19 consumption levels based on no trade issues. This is what we think the numbers will be if we don't have a trade war going on with China, Canada, Mexico, and the European Union. And there'll be
Just
somebody
say
else. Everyone. We're in a dogfight here, folks. But this is the no trade numbers. We've got ethanol at 5.63 billion bushels, lower than the USDA's current projection. And there's two things going on here. One, I think we're going to come in about 1.6 to 1.7 billion gallons of exports of ethanol this year. What we're seeing is Brazil starting to switch back over in their sugar production to ethanol. There's been talk about that because sugar prices are down. And while they did put a 20% tariff rate quota on everything above around 40 million gallons, they've been importing at 4 times the tariff rate quota for the first half of the year. So if they start producing more, that might peel back a little bit. But if we do work out something with China, I think there's real potential there to export a lot of ethanol to China next year. The other side of the coin is the blend, and I know, Scott, you've been in a lot of discussions with folks about the exemptions to small refiners, and we've seen over the last few months the actual blend rate drop. I don't know if you'd want to talk about that a little bit.
Sure. Without getting in deeply into the details, due to the small refinery exemptions that the EPA has been granting since sometime in 2017, we are seeing a notable drop in the overall blend percentage of ethanol in the gasoline pool. For example, in late 2017, we had quite a nice trajectory of looking at something like 10.3 or 10.4% of the gasoline, ethanol in the gasoline percentage, indicating growth in higher blends. That, in historical terms, fell off a cliff starting in 2018 as those small refinery exemptions have kicked in. And we need more data, but it looks like we're going to lose something on the order of 0.2 to 0.4% on that blend percentage domestically due to those small refinery exemptions. I thought that we might get some relief on that front from the 2019 rulemaking that might slow that down, but in fact, that rulemaking has solidified them for the rest of the year. I'm sure we'll probably get some questions on that more.
And the EPA doesn't want to hear about it either.
That's exactly right. So that's kind of a weakness that is emerging on ethanol that's not getting a lot of attention, but I think it's real.
I agree.
It's not a huge number.
No, it's not a huge number.
Right, but it's real.
You know, if we get rid of some of these trade issues, I think there's a real market in China based on their ethanol policy coming on, their drawdown in corn stocks. I think exports could be really strong. We got it at 2.2 billion. You know, at current prices, it's a bargain. I think corn's a bargain in the world market. It's cheap feed grain. We could go well over 2.2 next year, but this is just sort of on a safe side estimate.
Yep.
So we're saying a total consumption of about 14.8 billion bushels, which leaves us an ending stock of about 1.8 billion bushels, or 12.5 stocks of use. So we have the average price next year at about $3.70, which is in the bottom end of USDA's current range. And a lot of that has to do with the increased acreage and the high yield potential we're seeing, so a large supply. But having said that, even if if we get a higher yield, I think we could see more use. You know, this price pressure, you know, the yield, the supply keeping it down. I think corn's cheap at this price, and I think we'll see it move strongly without any trade issues. Now, having said that, that's a fantasy world. When we look at our consumption levels with trade use, we're going to stick feed and residual, of course, the same. I don't think we're going to have any problem with that. But we think it'll be hard to beat this year's ethanol use of 5.575 billion bushels with reduced exports. And basically for corn right now, in my opinion, these trade problems are an opportunity lost. It's not like we're still seeing over 50 million bushels a week export inspections, But it's an opportunity lost for a market like China for ethanol. And they don't import a lot of corn. They're below 10 million bushels, but they could come in strong if we had an agreement in place. So we're sitting at about 5.575 billion bushels for ethanol use, mainly the issue Scott talked about with blending, but a loss of that possible export. And for exports of corn, we're at about 2.07 billion bushels. Some of this is, will we solve NAFTA? Is this going to catch us in 18, 19? I still think we'll export quite a few bushels of corn, and it could be well above 2.07, but we're sort of losing opportunity in corn exports with these trade issues right now, I think, or the potential to lose more. So that puts ending stocks at a little over 2 billion bushels, or 13.9% stocks to use, and we're only dropping about 10 cents. I feel like corn, we've seen corn prices recently. They're caught up in a wash and general risk off. They're, in my opinion, 50 cents too cheap as they are right now. Scott, you might disagree with that, but I feel like they're too cheap, in my opinion. I think we'll see it in this range, 360.
All right. All right, I'm going to quickly go through the old crop situation in soybeans before we kind of get to the big stuff today, which is trade in soybeans. So the June 1 soybean stocks came in at 12.22. The guess was 12.25. A really small surprise in terms of the June 1 soybean stocks. So we're not going to change our old crop balance sheet for soybeans relative to the last June WASDE. We do have a little bit lower price, $9.30, compared to the last WASDE. I suspect with recent price action, the USDA will, in their next July WASDE, will lower their soybean price as well. So really not much to report on the old crop, so I want to preserve all our time for the big stuff. I'll turn it back to you.
Yeah. We saw soybean acreage come in at 89.5. That was below the trade guess. We've only added about 500,000 acres of soybeans from the March planting intentions. And I think this is a really nice surprise. I think many people thought we might see more soybean acreage with the prices we were seeing through April and May, and some of the planting issues we got off too early. So that soybean acreage is a nice surprise. So 89.5 is looking really bullish for soybeans if there weren't all these other problems.
There are other problems?
There are other problems. There are issues we're having. The acreage numbers, Illinois has got a record number of acres in soybeans. Indiana's got a record number of acres. So basically, it's pretty much pat. We didn't see too many changes across the states. There's a few movements here and there, but what we saw in March, pretty close to what we're seeing now in April. Planted acres minus June acres report. The last couple of years, we've seen acreage increase slightly, coming off some periods of really large declines. We saw the final acreage be above the June acreage report, coming off a period of really large declines. I think this year we may see a few more acres added. There's a lot of talk about double cropping off of wheat. I've heard a lot of people talking about that. We see the wheat coming out of the fields early. We could see some acreage go up, but I don't think it's going to be drastic in the end, in my opinion. Planted minus harvested acres, usually around 650 to 700,000 acres. This is pretty consistent, and we're going to stick with that number as we move into our projections. Our average soybean yield, this is our 2018 quadratic curve trend yield of 48.5 bushels per acre. We've got a lot of feedback on this quadratic curve issue, Scott, but we're sticking with it. Right now, based on crop conditions and some of the work we did earlier, we've got soybean yield at 49.5. So if you take, excuse me, if you take 88.9 million harvested acres, 49.5, we're looking at about 4.4 billion bushels of production. Carrying in 505, we're looking at 4.9 billion bushels of supply. With no trade issues,
we had it backwards.
we've got crush at about 1.99 billion bushels, about 10 million below USDA, because if we don't have trade issues, I think we're going to see really strong exports. Now, 2.25 billion bushels, I think is reasonable. I don't even think that's too much lowballing it. There's reports of Brazil increasing their acreage this year. There's reports out of China, and I don't know if I believe them, the reports, or the Chinese government, about using and importing less soybeans this year, and they've upped their acreage. And we've seen a turn in 17-18 to China's sourcing in Brazil. So even with no trade issues, I mean, that's a good use number, 2.25 billion bushels. So we're looking at consumption about 4.37 billion, and ending stocks 555 million bushels, which puts the stocks to use at 12.7. And we've got an average farm price of about $9.50. Now that June number, that's in the bottom half. It's about halfway between the range of the bottom half of USDA's number. Any kind of yield problem, though, this year with soybeans, and if we can get the trade issues worked out, could be really supportive. Those are really big ifs, though. So when we think about the 18-19 consumption with trade issues, that's right, folks. You see that 880 average farm price that we're projecting at 18.5%. We think at those low prices, crush will be stronger, 2.02 billion bushels of crush, but 2 billion exports of soybeans. Now, everybody knows China takes a lion's share of our soybeans in the world market. I don't think they're going to get away with not taking any of them, and nobody in their right mind, I think, believes that. But they could reduce it substantially. I think we'll see some substitution from other places. We've seen strength in places like Indonesia, Vietnam. The European Union's been taking some. Somebody's going to have to source soybeans somewhere other than Brazil, since Brazil's sending all of theirs to China if this trade issue keeps up. So 2 billion... It actually could be lower. I would be surprised if it was, though, even with trade problems. So that puts us at total consumption about 4.16 billion bushels, or an ending stocks well above 770 million bushels. So that 70 cents worth of difference with the trade issues we're facing right now in soybeans is about, 6.3% drop in price. You know, when we've looked over the last few months, this is the November soybean futures price, it's dropped about 20% since the start of June. Now, there's a double whammy going on here. Strong start to the crop year. Looks like really good yields are a possibility. And then the trade issues with China kicked in. And while this price has been falling and it's having a hard time recovering, I still think even this soybeans are a little bit oversold despite all the issues in trade. Scott, you might have some opinions on this.
Well, I thought it might be useful to dig in a little bit of the why we think that a price drop of something in the range of 6 to 8% for the 25% tariff for all, we're just assuming it's in effect for all of the next marketing year.
Yeah.
That's really dependent on how steep you think the export demand function is for our exports to China. Maybe you could talk a little bit about your work you've done on that.
Yeah, it's sort of hard. There's been a lot of work by economists trying to estimate excess demand curves and the elasticity of them. For those of you that are economists in the audience or had a ag econ degree, there's a wide range of variables, but it's real. I think it's inelastic, and I think it's probably near the 0.6 to 0.9 range. So if you think at 25%, it's inelastic in that range. We're thinking about 6 to 8% drop total. And basically what we're saying...
And that's on an annual average.
That's on an annual average.
These are all annual averages.
That's right.
This is important.
And that's a short run.
Right.
In the long run, the elasticity is, of course, much different. So for those of you that don't know about elasticity, we're just saying, yes, that 25% tariff is going to hurt exports to China. Other places will pick up, right? So you're not going to see a complete drop-off of 25% of the price. The support will come from other places. As China sources from Brazil, other places will lose out on those Brazilian exports. We'll move into those spaces, but there will be a price drop. It's basically like a tax. If you put a tariff on, it's like putting a tax on our export demand curve. So if you think about how would it shift the curve, it makes it more expensive at every point of possible demand.
Right.
So that's how we're thinking about it. I think that's a very safe assumption. It may not be right, but I think it's the best we got right now.
Yeah. So if you could go to the price chart again.
Yeah. Oh.
Again, it's hard to disentangle. This is the big issue that we're really looking at right now, because it's clear that good production prospects have influenced this. But why I think that this is largely the effect of, a market, initial reaction and fear taking over. Usually, I'd be an advocate that the market prices are pretty much always right. But here, pretty good sound economic analysis suggests that, we wouldn't expect on a season average basis a 25% tariff on soybean going into China would cause our price to drop 20%. That's kind of consistent. We just think basically that this is probably a minimum of 25 cents to maybe 50 cents overdone as a prediction of an annual price impact.
That's right.
And so we think that's an important message as we finish up our presentation, that, as, this kind of fear phase of the market reaction works its way through, it's probably not a very good time, if you can avoid it, to be marketing in the old crop soybeans or making new crop sales.
I agree. I hate to say just wait it out and see what happens, but I feel like this is a low. And we may see pressure as we move through the growing season if it looks like the yields are going to be higher as well. But, yeah, when you think about a total yearly average of the price, it feels a bit overdone to me. So, yeah, I don't disagree with that.
Right. Well, we want to get into our question, but I do want to point out that we did make a mistake on figure 11. If you can run us back there quickly. Todd and I got ourselves backwards. It occasionally does happen here at the U of I that we get ourselves mixed up.
This is all on me here.
That, in fact, in recent years, planted acres of corn minus June acreage, that means that corn acres are shrinking when it's in the red.
Yeah, shrinking.
And we said that backwards.
I said it backwards.
Yeah, we got that backwards. And so that would be a bullish factor if that pattern persisted this year. Maybe we'll lose some by the time they take the December survey.
Yeah.
That would maybe help a little bit.
That would be great.
Okay. So we got that straightened out. Now we're ready to pile into your questions. And I just can't resist the first one that came up. The question is, where is Daryl? It's like, where's Waldo?
Where is Daryl?
Yeah, I don't know if Daryl's listening today.
I hope Daryl's listening.
Yeah.
Hey, Daryl.
Yeah, we're saying hi to Daryl, our dear friend Daryl Good. He is really retired and enjoying his retirement on his farm in Illinois, I would guess, today. So that's where Daryl is. So a question that came up on the board. Again, just a reminder to please submit your questions as we go along here. We've got about 25 more minutes for questions. So, please be entering them right now. We'd appreciate it. So the question is, inelastic soy demand for China. What about the fact that China is reducing their swine herd right now?
They are reducing their swine herd, and when you look at their crush stocks are built up a little bit over last year from the information I get out of China, and they are drawing down the herd, and it is a major use for soybean meal in China. When we go into 18-19, I'm not so sure that that's going to continue throughout the next year. We'll see. The information's a little sketchy. Everybody says, oh, they're reducing their herd, and they say they're reducing their herd, and they are reducing their herd based on what everybody says. We'll see how it moves through next year, but they're still going to have a strong demand for corn. While they say they're going to be down, about I don't know. They're saying, I'd say 100 million bushels less than what they did last year, somewhere in that range. We'll see. They've been going up year over year over year on their imports for 10 years now, so, well, longer than that. So we'll see what that turns out to be.
Yep. Next question. What factors do you see supporting the increase in planted corn acres? I guess I would interpret that, Todd, as, where did the additional corn acres come from, given the economics being faced at and right before planting time?
Yeah, that's a tough. Well, most of the additional corn acres are out in the plains and northern plains.
Right.
And one of the strange things it's a bit of a head scratcher for me. Maybe they just got going and it felt good to plant corn and they just kept going, but it's out in the high northern plains in the middle where we added a bunch of corn acres. They got off to a late start to their planting. It was really cold in April. It looked like they were going to be behind, then it cleared out, warmed up, opened up for them, and they planted it really fast. And they planted more wheat acres as well. So
basically, the real story is we found more total crop acres, particularly in that part of the Midwest. It would be the upper Midwest and the Dakotas and in the western part of the Corn Belt.
Yeah, and I would say, and doing these prospective plantings reports is tough work by NASS, and I appreciate everything they do. It just may have been an error in the March prospective plantings report when we're talking about corn at 88.
Right. There's a sampling variability in these numbers. Large. That's I don't have it exactly on the top of my head, but it's probably around at least 1 or 2% nationally, and this could be well within that kind of sampling variability.
That's right.
Let's see. I saw a question. What is the best case scenario for corn price recovery? Well, when I was growing up in Iowa, living on the farm, my favorite story, my grandmother always told me to pray for a drought in Illinois.
Right.
So, interestingly enough, I think today's price action is actually a good indicator of what it's going to take to really rally the corn market. We're seeing a lot of heat and concern about the small grain, in particular the wheat crop now emerging due to high temps and emerging drought conditions in France and Europe. And, a drought someplace else is probably at this point the number one factor that would drive some recovery. And at the same time, some reduction in the U.S. yield potential would probably be the second factor. And we have to admit that right now we know that there's a ridge of high temperature that is moved in, as we commented. It's definitely here in Champaign today. That's going to be kind of floating around the middle of the country over the next 8 to 10 days. And, if that would persist longer than that, I think that, Todd and I would probably expect 176 number to start declining, and that will help with the recovery. I think Todd's in the same place. Even if we get some negative scenarios in terms of temperatures, we think it'll probably be hard for the U.S. average corn yield to go below 170 this year.
Yeah, it would be really tough. I think with this start, it would have to really heat up and dry out.
And the soil moisture reserves that we have now. Basically, it'd have to kind of quit raining and stay at 90.
Yeah, to really knock it.
Which I don't see in what we can see in the weather yet that kind of scenario is there. But those are the two things that I see that would really drive it. And of course, suddenly we would announce some kind of real deal with China, that would reverse some of the recent price drop as well. But I don't think with a big corn crop is going to pull us into a real price recovery.
Well, I there's a few points I'd like. We got to remember the South American crop coming out of their second crop in Brazil is not good. Their production's down. We're seeing fewer corn acres in China. When we think about the trade issue, if we did come to some kind of resolution with China and NAFTA, this risk-off thing we're seeing across markets now would go away. I think you could see it start to, because the fundamentals, we are in a strong demand scenario for corn. It's just caught up in this whole uncertainty, I think, around trade. So, yeah, any kind of weather issue, preferably in the northern plains, would be great for us here in Illinois.
Man, you got to get off that. Nobody's going to listen to our webinars now up there.
Nah, they're not listening anyway. And I think that we're going to have any kind of weather issue anywhere in the United States would be supportive, but any kind of trade deal would be supportive as well, I think.
Yeah. I did see a question I wanted to follow up on here. It says, can you review your thinking on a 176 yield? Seems high. It is high. We're, almost 5 bushels above our trend, 4.5 bushels above our trend. We take that directly out of our most recent Farmdoc Daily article, where we use a crop conditions regression model based on a 77% good to excellent. That's where it comes from. And, put a plug in for that same article showing there's still a huge amount of error in that forecast based on history. But that's where it comes from. It is easy to argue that that is a pretty big number. I think that's not too far from where most of the trade is at. I'd say the trade is probably someplace between 173, 177 in the corn for the U.S. right now.
I think so.
So that gives a little background on that. Let's see. Well, which one do you want to pick now, Todd?
Oh, what we got?
We've got a lot of them.
Well, what's this one here?
What do you expect for CRP acreage increase? That's a good question.
I don't know. Do you have an idea on that?
I don't. That's a good question.
That is a good question.
Let's see. Do you expect the market to defend the slight carry in soybeans? If so, is this due to the pushing the trade concerns from elevator to the producer?
I think it will. I think we're going to stay with the carry in soybeans.
Makes sense with the
I had to think about that for a second. Yeah, I think it's going to stay there.
Yeah, I think so too. It says small effects in all these numbers is curious. 50 million bushel corn import and 25 million bushel soybean imports. Oh, I see. Why do we have any imports, and where do these come from and go for usage?
They're just dribble in. We'll do like 2 to 3 million bushels of corn a month usually. When you look at where they're coming from, they're from our neighbors. Across the border, basically, right. And they go for the same usage that we use them for here. So, feed and any other kind of uses for corn.
Let's see.
What is?
It says, based on today's reports, what do you think the chances are of a summertime rally for corn and soybeans? I think let's just put ourselves on the spot. What probability would you give, Todd? Everything going on between now and October 1st of not necessarily a major rally of $2 or $3, but something that would drag us off these really low, maybe recover back to where we were in May. Let's put that on the table.
That's a good question. I actually would give it a 50% chance. I hate to split them, and it is if we can come to some kind of resolution with China on this deal, I think you could see a rally, right? To get back up into that mid-9s, the high 9s range on soybeans, corn getting up closer to 4. So, and why I say 50% is because based on everything I've heard, no one knows what the strategy is for resolving this trade issue. It seems to be invested in one person. That person knows what the resolution is and can do the resolution. And if he could come to a deal, I think we're in a place to do it. I'm getting more pessimistic by the day that a deal's going to get done. If you'd asked me 2 weeks ago, I'd have said probably 70%. Now, to ask me a month from now, I'll be like, it's over. But seriously, I think that's it. We could see with bad weather, if we had some heat and some dryness through July and August, you get a rally as well. the probability of that doesn't look too high right now. So to me, it falls back to trade.
Yeah.
You got a higher percentage than that? It feels like a coin flip to me. It really does.
I have a hard time disagreeing with that. I would probably be a little lower for my timeline. I think that both sides are dug in on the trade side. I don't think that there's a high chance of something happening quickly. But at the same time, I think there's going to be a natural tendency for some price recovery, because I think that we'll find out that kind of week after week after week that China's not going to stop buying soybeans from us. It's really a question of price.
Yeah.
And so I think we'll get some recovery, but I'd be maybe in the 30-40% range of that kind of price rally. So it says, do you compare 578 FSA to planted? I'm not exactly sure what 578 is. I'm guessing that's the FSA data on planted acreage.
Planted acreage.
And the answer is yes, like everyone else.
Yeah.
Yes, if that's what is being discussed. Do you see any changes in input costs, including negotiating cash rents for the next crop year? Boy, that's going to be a tough one based on the uncertainty that we see with this trade situation. Personally, I wouldn't have been surprised before these trade issues really blew up in May to have seen some very modest resumption of little upward pressure on cash rents, particularly here in the high states, with an outlook for a modest recovery in returns to corn and soybean production. I think that's what we were looking at, and I would have seen that translated into, but I have a hard time seeing how that is going to happen now.
Yeah, I mean, what we've seen cash rents, they've come back a little bit, but in high productivity land like here in Illinois, well drained, they haven't really weakened all that much. It's the moderate land and below where you've seen the weakness. So I think maybe, but yeah, there's a lot of uncertainty right now, so it's hard to say.
Says, again, is there any reasonable expectation of having an opportunity to hedge corn or soybeans on the CBOT? I think I would interpret that question as a version of what's the chance of a recovery from these price levels. And again, I think our view is that the current fear-based cliff diving in the grain futures markets, relative to our analysis of the impacts of the trade problems, right now looks a bit overdone. So I wouldn't be in a hurry to market old crop or new crop right now. Now, having said that, we do have to be careful. There could be a disturbingly high chance that we'll wake up one morning and the president has pulled us out of NAFTA. And what happens to the markets then?
That would be brutal.
I think that would be brutal.
Well, and we got July 6th, we're coming up on the announcement for China. I think the volatility we're going to see moving forward could be quite high, particularly in soybeans. But if we start getting into NAFTA, you could see some really strong volatility in corn as well as we move forward.
I think that a really interesting question just came in. Do you think that the USDA can do anything to offset the impacts of the tariffs? That is because I just saw someone put it out on Twitter today that Secretary of Ag Perdue indicated that they were tracking losses, economic losses of soybean farmers due to the tariff, and that there would be some kind of program if this persists into the fall to make up some or all of those losses. No one knows. How exactly they could do it is an interesting question. My first response is they're going to have to get creative because, as I understand it, what's being discussed are what I would call administrative solutions. In other words, taking the borrowing authority of the Commodity Credit Corporation, which is where the dollars come through for our farm bill programs, and somehow using that authority on an emergency basis to make up for these economic losses. Exactly how they would do that, I do not know. I'm not an expert on the details of the authorities that the CCC, that the Secretary of Ag has. We know we have a history of emergency disaster support for farmers in the U.S., and that comes to the CCC, and that is a disaster has to be declared, but it's a weather, crop-related, or insect for related disaster, and then those programs can kick into gear. As far as I know, this would be really unique in that it's literally an economic disaster would have to be declared, and then you'd have to figure out what everybody's losses were exactly and find some kind of way to essentially cut checks to people. I don't really know how they're going to do that. But I'm sure there's probably some leeway deep in the bowels of the authorizing legislation for the Commodity Credit Corporation that will give them at least some flexibility. We'll have to see.
I don't want to see it. It'll be interesting if we do see it. Hopefully we can get a resolution. My understanding of the CCC program is it does have unlimited borrowing authority. Right, but it's how you structure it.
Yeah. Now here's an interesting. There has been some talk that the government will provide farmers with some aid in a trade war scenario. Have you calculated how much aid would be necessary to make farmers whole based on your scenarios? Well, the direct estimate that we would make is the difference between our two scenarios. On a season average basis, it would be much like a counter-cyclical payment calculation. Make sure I have my number right. Was it 50 cents or
60 cents?
60 cents.
70 cents.
70 cents. There we go. Neither one of us could remember that.
It's just horrible.
Short-term memory loss. So 70 cents a bushel is, on that size crop is going to be just shy of $3 billion if I did my math right.
Yep.
And that would be a quick back-of-the-envelope figure for our estimate of the revenue losses to soybean producers. Without taking into account of higher sales to lower prices in other parts of the balance sheet. It's a complicated question how you figure that out, but that's a rough estimate.
Right, and we're talking something above and beyond crop insurance, right? And so I don't know how they would figure that out, to be honest with you. A revenue protection under the crop insurance program, it wasn't meant for this kind of scenario per se, but we had a 1019 February price. If we're still in the 880s or below, the crop insurance payments are going to be, we might finally in Illinois see soybean payouts on crop insurance.
Yeah, someone says market loss payments. Remember those? I think I do, but I'll have to go back and review that. This trade issue was really a lot of questions coming in that says, what would be the cost of such CCC action be? Wouldn't that fall against the WTO rules of subsidies?
Yeah.
Probably, but at the same time, I think there's probably wide leeway in the WTO rules for for emergency actions. There's a difference. The key for the WTO is that basically any price supports have to be tied to production and they have to be permanent. And in this case,
it'd be a one-off.
It'd be a one-off, and so I'm guessing that would probably get you around the WTO rules. But
and I think it's disconnected from. You could easily say it's disconnected from production. I think.
Yep. It says today's corn stocks report showed smaller on-farm stocks versus 2017, but larger off-farm stocks. Any significance in that?
I don't think so.
Yeah, I usually don't pay too close attention to that. It's a good question. There's always some variation in the stock reports from year to year in that ratio of off to on farm, but I haven't seen it be predictive and tell us much, in my opinion. What do you expect for corn basis through the summer?
I think it'll stay about where it is, where we've seen it over the last few weeks and into harvest, actually. I mean, there's still a good demand for corn.
Right.
And despite the price falling, I think it's going to be relatively stable.
Here's an interesting political comment. Midterm elections may loom over trade issues and introduce an almost black swan event, up or down. I presume that means if Republicans maintain their hold on Congress, I guess that would maybe strengthen the president's hand in terms of trade negotiations to continue a tough stance. But if lost both houses, perhaps that would increase pressure to make a deal. But I don't have a good sense of really how those scenarios would work out.
It seems like there's as many Democrats that are for this tough action on China. I mean, you get the partisan politics involved in all of it, but I'm not sure that would matter one way or the other, to be honest with you.
Yeah, I have another question I wanted to pick up because I like this. It always seems to come up. How do you think about prospects for early frost this year? What do you think, Todd?
Same as last year and the year before. It's a low prospect, I think.
Well, it is actually maybe more interesting. The crop is so advanced, at least here in Illinois, that I think we'd have to have a frost about August 20th to potentially really hurt this crop. So, all joking aside, I think that the early frost risk to the corn and soybean crops here in the heart of the Corn Belt is a very, very low. Up north, always a higher risk.
That's right. Well,
let's see. We've got about time for one or two more questions. Yeah. It's your turn to pick.
All right, I'll pick one. What we doing? There's a lot of questions on trade. I think we've beat that to death.
Oh, here we go. Ethanol margins.
Yeah, what is the outlook for ethanol margins in the scenario of continued small refinery waivers and no incremental exports to China?
Poor.
Yes.
Low.
Yeah,
that is a difficult scenario for ethanol producers.
Yeah, it's tough. I mean, we've seen good. I think it's going to be low. Is there a way to calculate the trade, election, and other non-fundamental price components of prices? In other words, what is the value of corn minus the extraneous issues? Well, the way we sort of think about it is the way we were talking about with soybeans. We think fundamentally the price should be. I think I can speak for Scott and I, but we think currently prices are about 25 to 50 cents below where the fundamentals right now say they should be. You might disagree with that, Scott, but I believe that. And a lot of that's just a risk-off, fear of what's going on, I think, in trade.
No, I'm right with you on that. On corn, here's the way I would answer your question. I got to grab. Can we go back to the corn? I need the new crop corn balance sheet. Right there. So this is the way Todd and I would think about things. So before, in May, we would have been at around $4 for 2018-19 before we knew we had the crop off to such a good start and the trade issues really ramped up.
Yeah.
We thought we were looking at a $4 season average 2018-19
price. That's
price.
Right.
And now with the improved weather, and some risk due to the RFS small refinery waiver issue on ethanol demand. The combined effect of those two, we think the prices dropped to $3.70. So that's a 30-cent price drop from those, mainly due to weather and acreage.
Yeah.
So that's a supply-driven price drop of 30 cents. And the trade issues, maybe another 10 cents.
Maybe another 10.
On corn, that's the way we would see it playing out. The market has actually, dropped more than that. So that's our argument that we think it's a bit overdone at this time.
And there's a lot of policy uncertainty across the board in that corn number, too. We're talking about waivers and RFS. We're talking about trade issues. There's just a lot of policy uncertainty right now.
Yeah. Well, we're about out of time, Todd.
Yeah. Thanks for listening, everybody.
Okay. There we go. There's the advertisement. Again, we thank everyone for tuning in today, and we wish you a very good weekend. Happy 4th of July. And just look for us in August after the next big USDA report date. With the August USDA crop production report. We're going to be back with a webinar on August 10th at 1 p.m. Again, updating the supply and demand and price prospects for corn and soybeans. And maybe we'll know something more on the trade front by then, Todd.
That would be great.
Yeah, we'd all appreciate that. Again, thank you very much, and we're signing off.
Yep, have a good one.